and that's so important because the layman people will want to buy something that everything is already there. But the investors will buy something that they know the future, what's going to come up, but they don't mind waiting for it. And at the same time, buying in and paying a lot more lesser. So next, the right time. I think it's very important here that just now, based on the topic that we talked about just now, should we be entering now or should we be entering later? So over this instance, I have a lot of so-called investors asking me, say, KH, should we be waiting out, especially so everybody is sitting on the fence and there's not much inventory in the market? Why not wait for the upcoming launch to happen in the next 2 years? We then take action. Then we have more option. Okay, it's a rational so-called thought process, but how does it look like in terms of the product that's launching now and of course the existing product? Okay, so in this instance, I just want to share with you this little video that I have put up that talks about the opportunity cost given this thought process, this frame of mind. All right, so the debunking the myth here is that upcoming launches are always the best. For some people, they talk about equal footing, right? Okay, when you enter, you basically can come in and buy at the same price. So everybody buy a launch day, everybody, rush in together with that euphoria. It feels like because it's a good buy, that's why everybody comes in and ballot. Okay, so over here I'm going to play a video and you can hear the thought process that I put in this little insights that many investors I work with has overlooked. Okay. Lots of people talk about the right entry, getting into a property at the right price tag. However, most investors are so hyper-focused about the right entry price that they often just forgo an entire project just because they didn't buy in at the lowest price, not knowing that they can still potentially profit a good 6-figure as long as they know how and when to exit their property investment in the future. This was the master plan published by the government in year 2008, stating that the Paya Lebar interchange station for the circle and the east-west line will be opened in year 2010. Now, if you were unaware of this and choose to exit this property at since built in year 2009, you would have only gotten 530,000 for it. But what if you were to wait an additional year and exit in year 2010 after the integration instead? A unit just one floor below with the same size and facing managed to fetch a cool 720,000, and that's a massive 35% more in just 1 year. And this is what most people miss out on when it comes to property investment. Buying right is only 50% of the battle won, because having the right exit is actually what makes you the money. And in this case, it's an additional 190,000 more in just 1 year. So guys, with this little video I just shared with you and insights that I share, this is a real so-called scenario that we see or we face on the ground. So those who say the existing one is actually the one that we should be looking at, where opportunity lies, I would also lean more towards this direction. But of course, at the end of the day, given what I've shared with you today, I will still want you to basically make your own decision. All right, okay. But of course, this is a real case study that you see someone else actually, both of them probably buy in at the same time. Okay, but one choose to sell when an infrastructure basically manifests and they took action to exit. And the next buyer then see the potential of the utilization of this infrastructure for their day-to-day needs. Hence, they don't mind paying another 190,000 more. Okay, and that's so important because the layman people will want to buy what? They want to buy something that everything is already there. Okay, but the investors will buy something that they know the future, what's going to come up, but they don't mind waiting for it, and at the same time buying in and paying a lot more lesser, because some of them call this a place of what? Where the birds doesn't even lay eggs. All right. So this is the kind of place that I like to look into because I always look at the future plans. Okay. So in this instance, we talk about the next so-called topic here, the project highlights, which is what we are focusing today, or if not, the golden nuggets for today. Okay. So the project highlights here that we are looking at, we talk about there's 11 of them. Okay. And all these 11 of them, what we're looking at over here, on the left side is the PSF, the left axis. At the bottom itself, we are talking about the existing project that starts from November 2018 all the way to July 2021 last year. Okay, these are basically the launches that happens within the urban transformation area. And over here, this is the in dark blue is its initial launch price on the date of launch. And in light blue is its current PSF today. All right. So in this instance, what we want to measure here is the take-up rate at launch date. So in all the triangular so-called spot that just came up, what we saw is that in over here, very clear matrix here, anything from year 2020 and before, I have very little take-up rate during launch. Okay, and what is the impact? It could be based on the impact of the property cooling measures that was introduced in July 2018. Okay, so whenever a cooling measure happens, what happened? Many people will sit on the fence, right? And don't want to take action, right? And this is basically how the take-up rate looks like. So on the right side of the chart, what we see, the right axis is actually the percentage of take-up rates. So you can see the Woodleigh residences is basically less than even 10%. And for one per bank, basically just barely over 20%. And Park Clementi's was just hovering 20% as well. And Midwood, almost maybe 5% only, okay? And very importantly, we then compare to even when COVID hit. So the lockdown happens when? April 2020. And what we see here, even with the lockdown happen, the number of launches and the take-up rate, the triangular spot that you see from Penrose onwards, the take-up rate is so high, okay? We are talking about basically above 60%. Okay, most of it is above 60%. We only have two that falls below that 40% mark, okay? And why is it so? Because demand outweighs supply. There's too many people who wants to buy. They know that this COVID is going to last forever and they have liquidity flush in the market and they decided to enter the market. So a lot of launches were all more often than not have a 60% take-up rate during launch, during this period of time, okay? And what's so important here is we then look at the current take-up rate, okay? Again, every product in Singapore will sell 100%, that's for sure, okay? If not, they will be subjected to ABST taxation, right? The developers. So in this instance, if you look at the first so-called 4 developments that happens in 2019, if you look at the take-up rate here, we talk about 10% take-up, left 10% availability. Okay, where are these products? These are the products, okay, left 10%. In fact, Park Clementi's a product that people only want to take up 20% during 2019. Right now, we see less than 10% available. Okay, in fact, you look at the per square foot, it has a hefty jump from $1,615 during launch day and today at $2,000 per square foot. And if you move the marker to the 20 percentage point, okay, so before we go to the 20 percentage point, all right, let's talk about Penrose as well. Penrose being the second one over here, we also see that on launch day itself, 60% and today is less than 10%. All right, PSF went from $1,541 per square foot in just September 2020. And right now we're just barely crossing probably just 1.5 year mark from here. And we're seeing prices shooting up as high as $1,700 per square foot. People are making close to 20% in just a period of 1.5 years, right? And then of course, Claremont itself also, based on the highlight here, launched in December 2020, PSF at $1,475 per square foot, and today it's $1,740 per square foot on this remaining unit, okay, and less than 10% F. And then we also have One North Eden, very sought after development within the Innovation District, and what we saw is that 85% take-up rate during launch day, and today we probably less than the last 3 units. All the 4 beta, that's why the price differential from launch date and now, you're looking at the bigger unit, hence the per square foot actually drops a little. All right, so initially were all the small units, hence the PSF were higher during launch date. Like I mentioned, 85% was taken up. All right, so we then talk about the 20% one. Where are they? Okay, so with 20% one, if for some of you feel that, hey, you know, KS, I don't want to take the last 10%. How about last 20%? So in this instance, on the left side, we have Midwood. All right. Again, from $1,578 per square foot launch in 2019. Right now, we are probably on the 2.5 years mark. And then right now, it's $1,719 per square foot. And then for Penrose itself, sorry, not Penrose, the next one we talk about Normanton, that launched in January 2021, which is just 1 year window, all right? Back then was $1,763 averagely, and right now we are looking at about $1,835 per square foot. Okay, in fact, prices are continuing to raise from time to time. I heard in February they are increasing price again. And of course, Pasir Ris 8, we talk about launch day at 1,624 per square foot. Right now, 1,860. Okay, and of course, we still have units that are going about 2,000 for the 2-bedroom size type. All right. So what's so important? Next thing is to compare the opportunities. Okay, existing project in this demographic and also the upcoming new project that is within the area. All right, so Over here, we then break down the urban transformation properties along with the upcoming new launch in 2022. And then we can then measure right now what is our potential headroom for growth, right? Okay, so very importantly, a lot of people don't really look at it from this perspective, or maybe they are too lazy to come up with the entire data collation. But of course, over here, I just want to share with you that this is where we measure, because investment is all about numbers, okay? And we don't get our numbers right, basically, we are just going in blindly by way of what? Feeling, right? And we don't want to put all our hopes into a feeling, okay? So in this instance, what we talk about the left side again is the per square foot. And at the bottom itself, the bottom axis, we see the district in terms of current development and the upcoming launch. So in light blue will be existing project, dark blue will be upcoming project. So in the left side, what we have per square foot will be in Landmark and One Pearl Bank, 2280 and 2603 per square foot. And right now, Maxwell, because it's a mixed-use development, likely it's going to be 3,000 and above. Okay. And then next, we talk about Holland. Okay, Holland area, Clementi area, we have as low as 1740 per square foot based on the existing project. If you walk in the showroom today, this is the price that you're looking at. Okay, comparing to the future, as high as $2,168 per square foot at 18 to 22 Yu Xiang Road itself. Okay, and we then talk about the Geylang Aljunied Precinct. Okay, this is interesting. Okay, because the current property at Penrose is $1,700 per square foot. But the Geylang properties that got en bloc were really cheap. Okay, and these are Geylang. Not everybody wants to buy Geylang, right? Of course, it's going through a transformation, but these are boutique development. And we are looking at the future sale price may be within this price tag. But what's so important for Penrose to share, under just now you saw about the upcoming launches within the precinct, right? So under the confirmed land sales, we actually have the Jalan Tembusu at Katong area. We also have the Daman side, all right, which is very near within that proximity. Now, of course, under the so-called reserve list, what do we have? We actually have the Kampong Bugis white side as well. So rather than comparing to just those that is already launched, which is these two are by way of en bloc, by the way, the future plot is what I measure by, all right? And then the eastern side of Singapore, we have Pasir Ris 8 and Tanah Merah at $1,860 per square foot, comparing to the future Tanah Merah, which is also a mixed-use development with the MRT, at $2,163. Okay, and then finally Midwood and the Jalan Anak Bukit side, where if you go into the showroom right now, it's $1,719 per square foot. This is its headroom for growth. We are looking at $2,263 per square foot. Okay, so let's look at the margin of so-called headroom that we are looking at over here. So price differential here for Landmark and Maxwell House with the buy Maxwell, we are talking about potential 31% capital gain. Okay, so if you are buying into this is what we are looking at, your potential headroom for growth for District 3 and 2, Outram Precinct. And for Holland and Clementi area, if you look at them together, there is about 11 percentage point difference, $428 per square foot, okay, between the most cheapest and the most expensive, all right? And then in the Geylang area, like I mentioned, because these are comparing to the boutique development, right now we see a negative 15%. But again, what I measure by is the development size. There must be transaction volume to give you price appreciation. So if you're buying a boutique development, there may not be enough transaction volume, and that will actually cause your property to stagnate. All right. So again, compared to the upcoming site, because they should be releasing by June or May this year. Okay. And then next, we then talk about the Pasir Ris 8 and Tanah Merah. We are talking about $303 per square foot differences, and this is 16% headroom for growth. And then finally, Bukit Timah, Midwood and Jalan Anak Bukit, 32%. So guys, if you look at the percentage here, you would know that which product will give you that level of potential to grow. Okay, and this is something that many people miss out on when they come to investment, because they always talk about the upcoming project will be the best one to enter to. And of course, in this instance, you can see very clearly, it's either we are looking at the potential of 11%, or if you buy the upcoming ones, so to speak, you may be a deficit of, so-called in this instance, in the District 3 and 2, deficit 31%. In Holland Clementi area, deficit 11%, all right, and so on and so forth, okay?